Hey guys, I'm Ali from FX Scouts. Now, you may have noticed that gold has been hitting fresh record highs for the last couple of weeks. And if you are looking for those clean entries on gold, then you need to go where the big traders go, and that is to the VWAP. In this video, I'll be showing you a simple two-mode playbook on the VWAP for gold, and I'm going to be showing you how to confirm your entries with the levels that the big traders look at, and I'm going to be showing you two different plays, how to trade a mean reversion day and then how to trade when it's trending. Just a reminder that forex trading is risky and that most traders lose money. This video is for educational purposes only. So what you're going to learn in this video: first, you're going to learn the VWAP in plain English, what it actually tells you. Second, you're going to learn why institutions care about the VWAP and why the VWAP's more useful than a simple moving average. Third, we're going to cover the institutional references and different levels that institutions look at so that you're well prepared when you're looking at your chart. And then after that, we'll look at the two different trading modes, mean reversion plays and trending plays. Chris and I just recorded a podcast that was released on Tuesday, and in that video, we cover what drives gold and why it moves. So please go check that out. I'm sure you'll find that video very useful in conjunction with this one. The link will be below. Okay, so before we jump in, I just want to quickly define the VWAP. It is something you can obviously find on Google, but for the purpose of this video, I'm just going to quickly run through it. So a VWAP is the market's average price for today, weighted by where the most volume traded. And that's the key difference between the VWAP and a moving average. VWAP shows you where the most volume has traded. And if price stretches far away from the VWAP, it often snaps back. If we see price closing above the VWAP and holding there, or closing below VWAP and holding there, we call that acceptance, and that often leads to a trend. And why do professionals care? Well, firstly, execution. Trading desks and institutions judge fills against the VWAP. So orders naturally cluster around the VWAP, and you'll notice that if you look at your charts too. In other words, professionals want to get the best possible price, and VWAP shows them where that best price is, and they get judged by getting that best price on any fill. So that's why price often goes back to the VWAP. And VWAP is where they benchmark those prices. And when price drifts too far from the VWAP, mean reversion flows often pull it back. Secondly, volume awareness. A moving average, as you know, treats every single candle the same. It weights it equally. VWAP weighs where the real size traded, closer to where the order actually got filled. Then thirdly, sessions and anchors. Because the VWAP resets every day, you get today's fair price. But you can also anchor VWAP to a specific moment. For example, you can anchor it to the London Open or the New York Open. You can anchor it to a breakout candle or a big news spike. This creates a dynamic support and resistance that institutions and big traders are also looking at. So the plain English takeaway is the VWAP shows you what the crowd paid on average today. Now, before you trade, you want to really mark the levels that the institutions are looking at as well, but you don't want to clutter your chart. So let's add the lines first. So today I want to add the previous day's high and the previous day's low. These are yesterday's extremes. And the reason we put these in is that stops often go just above or below these levels, and it shows you where we're having an inside trading day or a mean reversion trading day versus a trending day. And on balanced days, these also act like magnets. Then you want to mark out the prior week's high and low. And this is basically for context to see where price is exploring or where price may be going. Then you want to mark out the London Open. So the first 15 minutes of the London Open, and it often sets the session's tone. I've done a lot of videos on open range breakout, and you can go check out those videos too. The links will be below. Then you can add your anchored VWAPs. Now you can add the London Open, the New York Open. When 2 or 3 of these factors line up, it often gives you a very good confluence and a very good signal of what is about to occur. But I just want to remind you here, please don't get your chart too cluttered. What I often do is add all these levels, and then I go through and check where price is currently, and then I delete levels that just don't make sense for my trading ideas. If you have too many lines there, you start to get very confused as to what you should do when and what the lines actually mean. So I would remove the lines that don't make sense in terms of my trade hypothesis. For example, maybe you just want to look at the previous all-time high and only react if price goes beyond that level. Or you want to buy the dip with a touch at the VWAP at a round number. Or you want to look at an inside trading day, which is a day that trades between the previous day's high and low for mean reversion trades. So basically, always keep your chart clean and useful. Any line there should be pointing you in a certain direction. It shouldn't be there to confuse you. So if we look at how to set up the chart, firstly, you're going to turn on the session VWAP, which resets daily. I often remove the bands on either side of the VWAP just because it helps me to see what's going on, and I make the VWAP black. Then if you want to set the anchored VWAP, you go to this tool here and you click on that, and then you can anchor it at any candle. So for example, I'm going to anchor it at the London Open. Then you can label your must-have levels. So for example, you want to put in your previous all-time high, which has recently happened with gold. And then if we look at the previous day's high, the previous day's low, the weekly high, and the weekly low, and these correlate with the previous all-time high and the recent low. And then we'll add our round numbers with the zeros or 50s. So that would be 3650, for example, and 3700. And if you have a look, we can see that not all levels are useful. So this chart has got way too cluttered and confusing. So let's look at where price is now and remove levels that have no bearing on our trades. So I'd actually remove the last three levels here, the previous high, the 3650 level, and the previous low. And the reason is that gold has already reached a new all-time high and has moved past the week's high. So it's not an inside trading day. And also the top levels correlate with the VWAP. So they are very close to the VWAP, which means I want to have these levels on my chart. We also want to add the ATR, the 14-period ATR on the 5-minute chart to set stops so that each trade risks the same cash regardless of the volatility. Now I want to do a trade example, but before that I want to give a huge shout out to our sponsor Vantage. And I want to specifically highlight their promotions. So Vantage regularly runs welcome and deposit offers plus other limited time deals. And the specifics obviously depend on your country and your region. So you'll want to go and check out the promotions page to see what applies to you and look at their T's and C's as well. While creating the series, we used Vantage's Pro Trader, which is powered by TradingView, and we really liked it because it gives you all the charts that you already know with hundreds of indicators and dozens of drawing tools. But it pairs it with research panels that you can use while you work, which is very convenient. You'll see analyst views, featured ideas, technical insights, market buzz for sentiment, and then it also has a time zone aware economic calendar. And these all live beside your charts. You don't have to flip tabs or switch tabs to see what you're looking for. And getting started is very simple too, which is what we like about Vantage. You can open a demo account with $100,000 in virtual funds. And when you're ready to go live, it offers over 1,000 plus instruments for trading, including Forex, indices, commodities, shares, ETFs, and more. Vantage also offers some of the tightest spreads in the industry. It has 3 simple account options with very low minimum deposit requirements and tight spreads and low commissions. And if you're still building your skills, head over to Vantage's Academy. You'll find structured courses, ebooks, webinars, and educational videos, which means a full learning path that you can dip into between your trading sessions. If you want more information, please scan the QR code or click on the link below. So now that we've set up our chart, I want to go into the 2 different modes. The first mode is a momentum mode, and you'll use it when the session shows a clean drive or a break and acceptance above the VWAP, for example, if you're going long. And this is the prep that you'll do on the 5-minute chart. So first, you'll mark the New York opening range, the first 15 minutes. You'll then anchor a VWAP to either the New York Open or to the breakout candle. I will add it to the New York Open. Your long bias is valid if price is above both the VWAP, so the anchored VWAP, and the opening range high, or above the previous day's high with the anchored VWAP stacked underneath it. And of course, if you want to go short, just flip the logic. The trigger on the 1-minute chart is a break and retest. Price clears the opening range high, or the previous day's high, pulls back to retest, and then it continues. So the stop you'll tuck below the retest wick or use about 3/4 to 1 ATR on the 5-minute chart, whichever is wider. And your target will be at the nearest price swing high or big round number. A classic sign of continuation is acceptance above the previous day's high and it's staying above the anchored VWAP. And if price loses a previous day's high and drops underneath the anchored VWAP, then you might think that momentum is slowing down and that you should close your trade. Now, this other strategy I'm going to show you, which is the other mode you can use on the VWAP, is a mean reversion play. And this works very well because gold often ranges a lot intraday if there's no big macro shock causing movement. And on those mean reversion days, it frequently crosses the VWAP, which means that you can really capitalize on the mean reversion play. Here, we will also be looking at the round numbers, the zeros and the 50s. And when they line up with the VWAP band or an anchored VWAP, you get a high quality confluence. So let's look at this chart for a mean reversion play with the VWAP on gold. So here's the 5-minute gold chart. VWAP is the blue line in the middle. I've marked the 3650 round number, and here you can see the previous high way above the current price for the higher time frame context, and the previous low way below. This is called an inside day. And why does this matter? Well, an inside day is today's high minus the low, and price stays within yesterday's range. This means that volatility is contracting and the market is balanced. And on balanced days, gold tends to rotate around the VWAP. So now if you look here carefully, you'll see that price has crossed VWAP multiple times and we're getting long wicks at the band edges. And that's the look I want for a mean reversion idea. Now the setups. So step 1, you'll watch the stretch away from the VWAP and you'll watch price move upwards towards 3650, the round number. That push takes us far from the VWAP and right into a big round number. And I'm not chasing up here. I'm waiting for the sign that this push is running out of steam. That's very important. Do not ever chase the market. Wait for it to move before you react. Number 2, you'll look for the confluence and you'll stall. So right around 3650, we have confluence, the round number plus long wicking candles, suggesting it's rejecting this level. If your session has an anchored VWAP from the London Open sitting nearby, even better. And mine does, this dark band here. But the point is the stack of reasons for price to hesitate. So with a rejection candle, a long wick up, and a close below the 3650 level, that is my heads up. I then enter on the next candle short, aiming back towards VWAP. My stop goes a few ticks above the swing high, or about 1 ATR on the 5 minutes beyond the extreme. Your target one is at the VWAP. That's the bread and butter tag on your mean reversion day, and you're not going to get a huge risk-reward ratio on these mean reversion days. You'll note that on a mean reversion play, your RVR is much smaller than on a momentum trade. So it's fine if it comes to 1 to 1.5, and that's where I aim. Your second target is either mid-range or the nearest round number or the anchored VWAP sitting below. If price tags VWAP and stalls, then I'm happy to take the win. This setup prioritizes accuracy over getting huge R multiples. So basically, as I wrap up here, VWAP gives you the crowd's average price. It's basically a level that tells you where orders are sitting. And if you put these together, you stop guessing and you actually start reacting to what gold is actually doing. Thank you so much for watching. I hope you found this video helpful. If you did, please remember to subscribe to our channel. If you're not already subscribed, please give us a thumbs up and let us know if there are any videos you specifically want us to make. Thanks again, and I'll see you in the next video.